Hello, this is Ronnie. I'm back here with a clip taken from a long video that I just finished to record for my subscribers. I'm leaving the option for my services at 50% off for the first year open, and I'll be providing further details after the clip ends. So if you're interested, please stay on. I'll be talking to you again at the end of the clip. I would like you also to read carefully the disclaimer that I'm going to put up now, so that it is clear to you before you go ahead and watch the video. This is just a standard thing. Now here's the chart of gold. Very interesting situation here. It's looking to go up. This is the weekly, and I've discussed the long-term option on this one quite a few times. We had one long-term option taking this as 1, 2, potentially 3, 4. The third in red has not terminated if you work with this being 1, 2, 3, 4. Sorry. And zooming in onto the price action recently in the last few years, we can take this as 1, 2, that's 3, that's a fourth wave that may have terminated really, and now we're going for the fifth. The fifth could see a new all-time high, a record high, easily above 2,100. We're going to see then how it behaves. If it continues higher and it goes for sideways price action, that is obviously telling us there is plenty more upside coming, and we will adjust the long-term wave count accordingly. Maybe a huge fourth wave ended here. Yes, with this being 1, 2, that's 3, that's in fact a fourth wave. There's no need to jump the gun. Let's take it one step at a time. The weekly scale is showing us that the bullish forces are awakening seriously. I'm going to show you the action here, and I tend to believe that now we will see further follow through to that strength that manifested recently. Do you see? I think that there is a case here for an A, B, C, D, and the E leg is a bit problematic. I'll touch on that when I go to see the daily and lower scale. But that is my preferred reading, that we terminated with lengthy sideways price action, and now it's the time to start looking up. Our target, first target is 2080, and of course I don't think it's going to stay there, it's going to continue. Now gold is a very emotional market. I don't know what is going to be the background for topping 2080 and going into a record high. I really don't know what's going to be the background, but definitely there is going to be some news, and the media is going to try to attach that as an explanation why gold is rising, shift to safety, etc. But we know that this has been lying in wait here for a very long time. Yes, going sideways, consolidating, and it appears to now be ready to take off. Okay, so let's go to the daily. Up to here, A, B, C, the entire structure, yeah, it's very long. Yeah, on the daily you have to dig back. We have to dig back. A, B, C, D, up to here there was absolutely no problem, and it was undulating here in a very typical manner of trading range. The problem is here. What do we do with this? I mean, we can work with this being an A, no issue, and that could be our B fine, but we didn't get really a decent C. is it a case that in fact we face here a failure C? Yes, perhaps. Yes, I wonder if that is indeed the case. I'm not going to push a wave count. I'm going to work with some options here. This is my preferred option at this point, A, B, C, and we may have seen a failure C. When I say failure, what I mean is that we should have seen gold really going down, taking the stops from 1,751. Just like that, that would be enough. And then surge back. It didn't do that. If this is indeed a failure C, that tells you that there is a lot of buying, meaning the market is very strong. So it's going to continue at this rate, almost certainly pulling higher. Now, there is a reading that I don't favor at this point, given the surge that we have seen here. The reading would apply a D to the current level, provided it doesn't rise above the, let's put the red line right on the level here, which comes at 1,917. If it doesn't rise above this level, and obviously it sinks back to the trading range here, we're going to have to assume that all of this is a D, meaning the D that we thought ended here, it's going to find its end here. And then we have another several months of not doing anything, just going sideways here, and then going up. I tend to think, as I just explained, that we are done. It's more appropriate to use the time scale that we have witnessed up to now as really giving us the dimension for how to treat the various legs. You see here 2 months, 2 months and something, here 2 months and something, here 3 months and something. If we have failure C, we have 2 months roughly and something. Okay, so we are between 2 to 3 months, most cases 2 months, and this is the beginning, so this is the exception. But when it begins to go into narrowing price action, that is the time scale that is in force, that is controlling the price action. So I tend to think that that's done, because if we come down now, we have seen 2 months here, 2 months here. What's that going to be suddenly? Oh no, that's completely out of tune. Yeah, that's going to be many months. It's going to be 6, 7 months. Why all of a sudden? No, doesn't make sense. So I go with a time, with the rhythm that we have seen here. You understand? Yeah, and that is the preferred reading, that we have a surge underway. Okie doke. Let's have a look now at the daily, at intraday. That's the 60 minutes. So I'm working with this being potentially 1, 2, slight failure here, 1, 2, and that's another 1, 2, and that's a 3, 4, and that's a 3. Now if I'm right, we're going for a fourth wave. Okay, we might deep a bit now. I wouldn't think it should go lower than 1,870. It has no business going back to 1,850. That's too much of weakness, and it's going to kill the momentum. So that might raise an issue here, whether this correction could be a correction to the entire move, and I missed some intra moves here. I missed. Maybe it is a 1, 2, 1, 2, 3, 4, 3, 4 like that, and that's going to be a second wave. Meaning that's your first, that's your second, and then it's going up in the third wave. But if it stays confined to this zone, yeah, roughly what I'm showing you here, 1870 plus, it goes sideways, it spends, let's say, 1 or 2 sessions, not more, and it continues higher, so that's the right wave count. 1, 2, 1, 2, 3, 4, 3, 4, wherever it's going to end, and we're going for the fifth. So this is good news, of course, for the precious metals fans, those who are keen on trading, investing in this market. I'm going to go to the, let's go to the 1 minute scale, see what it's been doing recently. Now, I had this when I was examining it this morning. I was looking at this. Take a look. Let's put it, yeah. So that's the previous top, fifth wave right here, and then 1, 2, 3, 4, 5. Fine. I saw this as a triangle, and I thought that could be a B, and I was reading it, and I was saying to myself, it's going to go down. Great, it went down. What's that? Well, it could be two things. And don't forget, this is 1 minute scale. By the time you see that, a lot of new bars you're going to have here. Either we're going to end up having something like that, which means that the B probably ended here. Yes, so you have to adjust that, and then you're going for the C. Now, if we do get the triangle here, the odds will increase even more that it is going to come back forcefully. Okay, you have a clear ABC here, it's going to come back. And what you could do, you could work with some ratios. In that case, you take this as your A and the B, wherever it's going to end, let's say it ends here, and you expect equality will take you to 1877. And if we go for an extension of the C, then naturally it's going to be lower, and it's going to go to this level right here to 1877. Okay, which is coinciding with the support level right here. So this is normal. This is perfectly normal. Do not give up on the rally in gold if you see such a thing. That will be just an ABC. I want to emphasize, if you get a triangle here, this is very good news. Okay, short term, it's very good news. If it dips, that's an excellent buy. Okay, it's very likely to bounce back strongly in this manner. No guarantees, of course, but it's very likely to bounce back. It might need to do more work on the on finishing the fourth wave, but we can expect with reasonable degree of confidence to see a rally above 1902 registered here. Now there is another scenario, of course. There are several, but I'll show you just another one quickly. Suppose it's more dynamic and much stronger than I think. At this point already, it is not going to come back here. That's all. It gave me the A, B, and the C was, if you like, a failure, because it's not a match to the A. And it is going already higher. It's going above this level. It's going above 1896. It's going there. It's not going to climb immediately above this level, because I don't think it's going to be ready. But it's going to do that. Well, that tells you that it is likely to stay confined to a fairly tight range between 1902, let's say, to the bottom here. It's going to spend a bit of time here. That will be a sign of a lot of strength. All in all, I expect further rally in gold. Let's have a look now at silver. And silver is going to follow. Silver is going to follow. We have both of them coming up after a huge consolidation here. The problem is, what is the best wave count to apply to silver? And it is really not easy. It's not easy. I think that in a situation like that, we have to say thank you that we have at least one wave count that is clear, more or less, in gold. The fact that it's not clear in silver, it's a problem, but simple technical analysis approach would tell you you had a huge surge here and you had massive consolidation. And when you go back, let's go to the quarterly, and when you view things from a quarterly perspective, you see this surge, meaning silver silver had enough doing nothing for a very long time, came down, took the stops, reversed. Now that's it. This range is history. It's gone. It's not going to go back there. If it was keen to go back there, it would have done it by now. It had enough time. What it did, it actually consolidated the gains. Yes, so it's going to take its time, but I think the range that it created here is now going to serve as a launching pad to break the roof that's got here at roughly at 30, and it's going to continue. It's going to punch above 36, and that's going to be longer term our target. But what do we do with the movement here? And that is not a straightforward. I don't have a straightforward answer. It could be that we have a fourth wave here, although there, when you go down to the weekly and daily, it doesn't look like you have a 1, 2, 3, 4, 3, 4 like this, and you're looking for the fifth. But I think the best thing is to take our lead from gold, and watch carefully. Possible alternatives should be considered here. Is that a 1, 2, meaning that's an A, that's a B, and that's a simply an A, B, C, D, E, diagonal C? That's possible. Is that 1, and that's complicated 2, which doesn't sit very well because of the subdivisions. Yes, we don't have clear set of subdivisions here. That's mainly the problem. Okay, I'm going to jump back to the weekly. Let's have a look. Now we have established that there is solid support right here. Okay, solid support. So if we go with this being 3, yes, suppose this is 3 or even here, we are expecting a triangle to terminate here. We had several alternatives before that we worked with, but I would say that currently, if we see silver running about 24.70, right here, 73, that's news. That's news. It's quite possibly finished with whatever pattern it was doing here. And again, I could sit here half an hour and explain to you all the various patterns, and at the end of the day, you will be confused. I think let's just take this level as critical level. As I said, we have the lead of gold. Great. This is important level. It runs above this. I would say bye-bye to this trading range. It's on its way to continue higher. Of course, if gold continues to stay strong. We had this as an ABC, X, A, B. I don't think it's likely to still turn out to be a 1, 2, 3, 4, 5, meaning it's going to go down. But just in case, I'm leaving these labelings at this point, because technically it is feasible. I'm not terribly excited about that, but you see that's the daily 1, 2, or 2 ending here somewhere, and then going down 3, 4, 5. That will mean relatively deep correction coming in gold, and I don't see this at this point. So in such a situation, we need to master our energy, focus on being patient. Being patient, this will be resolved fairly soon. My website, the homepage, is right here. It's Wave Mastery, www.wavemastery.com. Yeah, wavemastery in one word.com. That takes you to the homepage. You can scroll down, look through some things that I've written here, some recommendations from past users and current users, and that is essentially the offer currently open only to first-time subscribers. Okay, so there is the daily service, daily videos that are preceded by a trial, so you can take the trial for 1 week, and at the end of that, if you're happy, you do nothing, you go on to the plan of half price. Essentially 79 presents half price of the normal price, and that will be good for 1 year. That means 12 payments of 79. If you want to watch just the weekend videos, then you go for this one, and it does give you access to the weekend videos, and I often also insert a video as a bonus midweek, just to keep you on track, to see a little bit where things are moving, because sometimes 1 week of full price action is a lot, and the wave count can change, especially if you're a short-term trader. You really want to know what's happening. So that is essentially the situation. If you decide to go, for example, for the daily videos, you click here. It takes you to the page where it explains to you. You should read that. It explains to you what is covered, etc., etc. If you like what you read, you click here, subscribe. It takes you to PayPal, because my paying system is through PayPal, and you pay through PayPal. You can see you have the trial at $9.99. That's for the first 7 days. As I said, if you like what you see, do nothing. It just goes automatically. If you don't like, you can cancel. Or if you don't know how to cancel, or you have any doubt, you have any question, you can write to me, of course. Once you go through and you pay, you come back, PayPal will send you back to my website to fill in your profile details, choose your login, and once you do that, you will be led automatically to the page with the links to the various videos classified by date. If at any point in time in this process you have a problem, things are not going as I'm describing to you right now, all you have to do is just contact me and I'll help you out. That is essentially it. So you'll have 1 week to look at things. I would like to just spend a minute about the website itself. I have written here a few articles. Is this website for me? You can go through that one. Psychology and trading, trading and the arts, why join? Yes, each of these articles could perhaps help you to see how to relate to my website, but there is no substitute, in my opinion, to actually take a trial. You know, you take a trial, and I want to say another thing. You take a trial and you can't make up your mind. You want more time to think. Fine, I understand that. Then you cancel, but then you are not allowed to take another trial. Please, I want to be very clear about that. There are people who abuse this, and it's really not right. You're not allowed to take more than one trial, okay? A trial is a trial. But if you are interested, after you take a trial, you're interested to come back, you can still benefit from the low price for the next full year, but you have to write to me, and then I will send you a special link without a trial. And if you join, then you're going to go immediately onto the reduced price plan for 12 months. Okay? If you take another trial after you took already one, I am going to have to cancel that and refund you. And if you do that 2 or 3 times, I'm just going to blacklist you, because there are people who have been doing it, and I'm afraid this is really absolutely not right. This is subscribe here. Use subscription. Once you are logged in, you will see this one highlighting you daily service videos or weekend service videos. Yeah, it will show which one you really have the right to access. The daily service videos, to be very clear, they cover the weekend service videos, okay? So you don't have to subscribe to both. The daily covers everything I do. The weekend, of course, is more selective. Now, I have here resources. There are chart galleries right here, chart 1, 2, 3. There are plenty of charts here that give you an idea how I go about subdividing various market action here. There I covered a lot of markets, and you can see there is history here that could be very interesting for you to just go through. Let's see, platinum, for example. Yes, that's 1973 to 1978. If you click right on top where it shows you the hand, the chart opens up big. You can print it if you like. Here's an example of platinum, April 1980. 1, 2, 3, 4, 5, and then the huge correction that followed after that. So there is plenty for you, whichever market you're interested in, the financials, commodities, precious metals, etc. Okay, so that's chart galleries. Then useful links, as the name implies. Yes, recommended reading list. You have a long list of books here that I've read over the years that I found very interesting. Of course, I have many more books that I would like to add. It's just a question of time. I don't always have time to update this one. But the books that you find here did help me in the beginning, and still the information here is very valuable in these books. For example, Kroll. I don't know how many of you heard about Stanley Kroll. Stanley Kroll was a really imaginative fellow trader that wrote very well about his own trading and in trading in general. I learned a lot from these books. And of course, if you haven't heard about Reminiscence of a Stock Operator, you should get this book and read it. You will not regret. This is a book that most traders, I think, have come across and read. It is very interesting. And as you go down the list, you will see if there are things that are of interest to you. Of course, go ahead, get them. Some of them are even available online for free as a PDF. Check that. If you have questions about that, you can even contact me. here's the contact us, and you put your name. Please make sure you give me the right email address. Message, simple maths, submit, I get it, you'll hear from me. I'm based in Belgium, so if you write to me from Australia or from the US and I'm having my rest, do not be surprised if I don't react quickly, okay? Normally within a day you will have a reply from me. I check my email fairly regularly. So that's about it. Hope to see you visiting my website. Hope to see you taking a trial. If you have any questions, again, don't hesitate. Get in touch with me, and wishing you a great trading week. Bye now.